All right, stock market. Let's take a look at this. We're going to look at the S&P 500 weekly and daily, and we'll take a very interesting picture in here when I switch over to the SPY. So we are in a period in here where the market is rising in favorable seasonality. The issue is that the broad market, there's been a ton of deterioration in here. So an important low came right over here. And what we have in here are cycle harmonics that are slightly out of phase, 9 week and 26 weeks. So this low right over here was a 9-week cycle right over there. This is where the 9-week and 26-week cycle made the bottom right over there. And that was clearly this dominant low right there. So it got this correction right in here of 5.2%, and now it's been really churning, getting back up close to the all-time high. And we talked about the potential of the S&P 500 nudging out that all-time high, while the other indexes, the NASDAQ and the Russell, would not, and they are looking much worse. So we have the higher cap stocks that are rebounding in here, and it's pushing this up. Momentum has turned flat, as you see in here, waffling around just a little bit, while the momentum in the NASDAQ and the Russell are clearly negative. It came down here, it hit support, but it gave up a lot of ground. And I'm going to show you in just a moment the short-term patterns that look like we're coming back into a period of risk soon. This is that period that starts January, February, and into March, that there is a lot of risk right in here for the intermediate term. So our 3-month view really is that it nudges out a high in here with the other indexes not doing so, and then it gets into a period of continued volatility and a much bigger break where you have at least a 10% correction out into March, with a potential of much more of that out into March. Best case I can make is 425 here out into the March timeframe. I do believe it could get down closer to 400 in the SPY in that timeframe. So this is the beginning of a period of risk out over here, and this is just, in my opinion, a test of the highs where it might just take it out by a little bit. That's the SPY on the weekly. The SPY on the daily, I have a little more information on here that I think is important. So you can see this big dash cycle is the Russell. And the Russell had a breakdown right over here on 11/18, and it is in much worse shape than what you see in here. And here are your cycle rhythms in here. These are about 20 days on average, and this is the big dominant one for the Russell, about 40 days on average. We're getting into a period right over here after the next couple days where the risks should pick up again, and we're looking for weakness that will occur after Christmas and into New Year's, and then into the early part of the year. This next trough in here is between January 4th and 12th. Now, the NASDAQ had a breakdown on Monday of this week. It actually got below this level, and the S&P 500 getting down close to it tells a bad story. So it really says that this should fail again right up in these levels or just above it, and then begin to come down. So we see risk in the market coming in just the next couple days for another one of these kind of sell-offs that we've had in here. And you can see the range that we're in, though it might just nudge out the top of that range at the all-time high, 473. We think it will coming back down here closer to that 450, and then do this again out over here into January, where, remember, we thought it would come sometime out over here where the high was made. Again, this could take out the highs on the S&P 500. We do not expect that to happen. And then after that, the bigger decline out into February and March is really where that begins. So we see a lot of choppy time frame in here, and we talked about a complex top forming, and that's really what that looks like to us. So we'll be looking for a failure coming in this area, another sell-off, another rally attempt out into late January, and then the beginning of the February and into early March, bigger decline and bigger correction. This area where that low was made in here The low there is about 450 right there. Once that's taken out, it declares a major top to us. So it's avoided it while the NASDAQ had a breakdown on 1220. The Russell had its breakdown on 1118. And all of that points to a divergent market right now, which we see, and the likelihood that nudging out these new highs is not going to mean much, and the market is very likely to get waves of selling on the downside. If you follow our VIX analysis, which I'm not going to show you right now, we've talked about the fact that there's another pop likely coming in implied volatility starting in about a week. Or less. So there's we think there's lots of pops coming in implied volatility based on this pattern. It would not surprise me if the range didn't break to the downside until later in January, but that's what we expect. We think there's probably 1% upside potential from here and 10 to 15% downside potential. That's a pretty big call when I look at that, but the risk rewards, based on all of our analysis here, and I'm showing you that side-by-side analysis on the weekly and the daily, say that there are waves of selling likely coming in the market, with the first one potentially coming starting next week between Christmas and New Year's. So that is a look at the stock market. All right, our holiday special, and don't go away because there is something new on here that's fantastic. Our great holiday gift for traders and investors, so you give the gift of askSlim. We have special rates, 3-month membership, non-recurring. You won't be billed again. The person you give it to won't be billed again. Give that gift to someone you know who loves trading or investing, or give it to yourself. Great for first-time members. Or use this special membership to try one of our higher levels. And as a bonus, we're going to send you back an Amazon card to help you give gifts to somebody else, pay for some of signing up for askSlim. And now this amazing added bonus, the askSlim Market Monitor. I want you to watch this because this is just absolutely great and crazy. Arvi's going to show it to you right now.
Hello, this is Arvi Ramachandran. In this video, I wanted to take a couple of minutes to introduce our new askSlim Market Monitor to our members. The askSlim Market Monitor uses our proprietary studies, which include the Reversal Scout, Slim Ribbon, MCI, and OBI, to provide an at-a-glance view of the condition of the symbols in your watch list. This is a fully customizable solution, and the Market Monitor really allows you to scan and sort your watch list based on any of these indicators, and that's why we think it's really super valuable. As part of our holiday special, in addition to the Amazon gift cards, we are also going to include the Market Monitor for the first 50 people who sign up for either a level 4 or 4 plus membership. And as always, our existing level 4 and 4 plus members will also get access to this great tool. So with that, let's go ahead and take a brief look at the monitor itself. So this is the askSlim Market Monitor, and currently we have this set to the askSlim focus list, as you can see right there, which is the set of stocks that we follow very closely and update 2 to 3 times a week for our askSlim level 3 and 4 members. What I want you to first focus on are these 4 columns to the right here. On the left, we have the askSlim Reversal Scout right here, which is the most sensitive indicator, and then we have the Slim Ribbon. After that, we have the MCI, and then we have the least sensitive indicator of all of our indicators, which is the OBI. And what we'll do is really go from left to right here. So what I first want to highlight is, just from a visual point of view, just the greens and reds that you see in these first 2 columns. It'll give you a good sense for what is the underlying state of the market right now based on some of these top traders. And what you'll see if we just scroll down here is really a mix of green and red. So clearly a very mixed picture there in terms of that daily momentum in the both Reversal Scout as well as the Slim Ribbon. Next, I want to shift to the MCI. The MCI uses multiple time frames to really come up with a sum of the evidence condition on an underlying stock. When it's plus 25 or higher, that's a bullish condition. When it's minus 25 and lower, that's a bearish condition. And when it's in that range of plus or minus 25, that's really more neutral. And what you can do here is you can sort by MCI, which is really cool. So you can see these are the most bearish stocks based on the MCI. We see FSLR, CRM, SQ, XRT, EEM, GS, JP Morgan. If we now sort by the most bullish names, You can see that we have AVGO, Amgen, MCD, NEM, FedEx, Costco, and Micron. Now let's go ahead and shift over one more column to the right and look at the OBI. The OBI was really built with option traders in mind. It gives you a sense of bias for those traders with a 30 to 45 day time horizon, which is really a lot of swing traders. And when it's either +2 or +3, that tells you that you have a bullish bias. If it gives you a +1 reading, that says that the overall bias is positive, but on the very short term, it's a little bit overbought and the odds would favor a pullback. And conversely, on the downside, if it's -2 or -3, that's a bearish reading. If it reads -1, that says that the overall reading is bearish, but it's a little bit oversold in the short term, and you'd be watching for a bounce. So let's just look at MU here. So for MU, you can see on the reversal scout, it's +1. On the slim ribbon, it's also +1. So that tells us we have really bullish daily momentum right here. We also have a very positive reading on the MCI at +78. So that says that we have a very bullish underlying condition here. Now note what the OBI says. It says +1. So that says that the overall trends are positive, but it is very overbought here in the short term, and the odds would favor a little bit of a pullback. So what do we do with this? Some of the evidence here, it says watch for a little bit of a dip and then look for higher highs after that. And we can tell all of that just from these 4 indicators, and I didn't even have to open up a chart. And that's why this is really so valuable, and why we think our members are going to really love this. So I hope it was helpful to walk through this use case here in Micron, and you can really do this for any of the symbols here. You can look at any of these symbols and get that at-a-glance view of that underlying condition. I also wanted to briefly touch on an enhancement that we have made to both the Reversal Scout as well as the Slim Ribbon PO. We have added in new code that now allows you to get alerts sent directly to your thinkorswim desktop application. This is something that our members have really been asking for a while, so we are really happy to bring this to you as well. Keep an eye out for an email from us with both the Market Monitor as well as the updated Reversal Scout and Slim Ribbon PO Think scripts. Lastly, I do want to note that we will have a webinar in mid-January for our ASLIM Level 4 and 4 Plus members to answer any questions that you may have on how to best use our tools. That's all I have for now. Thanks very much for listening.
All right, that was fantastic. Avi presented that beautifully. This is a great tool, our new Market Monitor. I want to invite you to go over to the ASLIM website. And this, of course, is for Level 4 and Level 4 Plus members. Here's the website. You can just click on this top, save 30% or more, and that takes you to our special page where you can see all of the information in all 4 of our gift memberships, and you can see that we're going to send you back these Amazon gift cards right in here. For Level 4, we'll send you back a $100 gift card, Level 4 Plus, a $150 gift card, and you'll be able to get that great information that we offer you in all of these memberships. I want to also show you that if you're going to be a Level 4 member, you need to have a TD Ameritrade Thinkorswim account, and I'm just going over and scrolling over on our front page there, and this is where you go, click on that. We will get credit if you open this TD Ameritrade account, so I want to encourage you to do that. Become an account holder at TD Ameritrade Thinkorswim. That's our preferred broker. We run all of our charts on there, or most of them at least right now. So please do open up an account and become a Level 4 member. This great opportunity. Only 50 packages available in this new scanner that is going to be immensely helpful to you in your trading. So thank you for watching that. I think it is fantastic.